7:15. I think that clock is a little slow. So welcome to this meeting of the Standards and General Purposes Committee. Item 1 is apologies for absence. Do we have any apologies for absence, Amy?
Yes, Chair, we've got apologies from our 2 independent persons, Clive and Katie, and Councillor Butler is attending remotely this evening.
Yeah, sorry about that, Chair. I'm on a platform. Thank you.
At least you've made the effort, Ben. Thank you. Item 2 is declarations of pecuniary interest. Do we have any declarations to be made? Okay, you're doing very well. Item 3 is minutes of the previous meeting. Are they agreed? So I'm to sign these. Item 4 is the final accounts, and Roger Kershaw is going to introduce the accounts. Caroline Holland has given her apology. She's at another event and is planning to attend, but she'll be here as soon as she can. I did say to her that her punishment would be that all the awkward questions would be left for her to answer. So she's prepared for that when she arrives. Roger, if you'd like to open up, please.
Thank you, Chair. That certainly gets my vote as well. Thank you for the opportunity to introduce this report on our accounts. And you can see they are quite weighty, but they obviously comply with all of the standards. And there'll be opportunity to hear from our external auditors in a minute. But just to introduce the report, I'm pleased to announce that the targets that we are set for our accounts, being the accounts ready for audit before the 31st of July, we have achieved. We actually had them ready on the 6th of July, which was very pleasing. And there is an intent to sign them off by the 30th of September. We expect to, the audit, and I'm sure our external auditors will remind us when they speak next, that is entirely an expectation, but there's still a little bit of work still to be done, which you will see from the report, and we can go through later on. But it's pleasing to note that if we do achieve this, and as I said to you, we have every confidence that we will be able to, we're probably going to be one of only 50% of councils that will have signed off their accounts by the 30th of September. So that would be quite an achievement for this council. You'll note from your papers that EY have issued 2 results reports. One's for the main body of accounts and one is for the pension fund, and you'll have their reports in your pack, and colleagues from external audit EY will introduce those shortly. During the course of the audit, we made some adjustments during the process, and that was mainly down to our interpretation of what was quite a rapid influx of COVID grants, and members will be aware of sort of fairly frequent announcements from government about various grants for this, that and the other to help the council to deal with the impact of COVID in terms of the public within Merton. And sometimes the accounting treatment of those grants, the guidance for that came somewhat later. And during the course of the audit, we were happy to agree or take the view of our auditors with regards to, in technical terms, whether we were acting as a principal or an agent for the treatment of those grants. So there was nothing at all untoward. It was just how we had treated them in the accounts. There are 3 issues emerging from the accounts, and our auditors will probably go into them in more detail during their piece in a minute. One is around something we call ISA 540, which is about validating the process that our actuaries use in valuing our assets and liabilities for our pension fund. And this is an ISA that came out in about 2018, which is first applying to the accounts this year. And in many ways, it's really a discussion that our auditors need to have with our actuaries, and those discussions are going on at the moment, and we await the outcome of that. So it's not anything we've particularly done. It's really the new requirement for our auditors to validate the work of our external actuary. So that work's ongoing. Two other areas within our accounts, you will note it's in what we call the audit differences page in the report, and our colleagues from EY will no doubt take you through this. One is relating to our NDR, national non-domestic rates, and we've reduced our appeals provision during the process by using local information, and EY have a view on that, and they're requesting further evidence, so we can elaborate on that during the course of the meeting if members wish. And another view is on our Section 106 grants, which is around planning applications, etc. And it was really a view on whether they should be treated as a capital grant receipt in advance or a reserve. It's a technical item. I can assure members that the cash is there, and the intention to use the money, the 106 money, for the good of the community is still our intent. It's simply a matter of whether we treat it in the balance sheet as a receipt in advance or a reserve. So it's a technical this sort of disagreement we're having. So we are working on that. But that's the only sort of three issues I would draw to the attention of the committee tonight. But there may have of course be further questions that result from the main body of the account. But that's all I'd like to say at this stage, Chair. But obviously happy to take questions later on.
Thank you very much for your succinct presentation, Roger. Much appreciated. So we're going to ask the auditors now to speak. Is Liz joining us? I couldn't see her name up there. Oh, there she is.
I'm here, right. Chair. Hello. I was going to say, firstly, I'll apologise for my surroundings. I'm at Centre Parks on holiday, so it's all a bit random. And now I realise I'm on a very big screen, so I do apologise, members. But I did want to just join for this agenda item, and then I can leave Ian kind of in capable hands for later on. It was really just to say, kind of echo everything that has just been said. I've probably very little to add from our side, but obviously Ian will do so. Really, probably just to echo that the ISA 540, the accounting estimates ISA that was revised and obviously applied from this year, it is a national issue that is affecting all audit firms. And I won't go into the detail, but it's effectively, we don't have assurance over an element of the actuarial valuation and the work that then we are relying on, and we need to check that it's accurate and valid, and everything that they're doing given to us in the IS19 assurance report is met, and actually the data is correct that's been input to then get the report that then is obviously disclosing your pensions liability. That work is ongoing. All audit firms are in correspondence with the National Audit Office, all the actuarial firms we've had meetings with over the last week, and we're also talking to the FRC, which is our audit regulator, about whether or not we need to do this additional work, because there is a risk to all audit opinions that were being aimed to be signed by the 30th of September. EY Pensions Consulting, which obviously we're lucky that we actually have a pensions actuarial team within EY. Not all of the audit firms do in the public sector, so it is slightly alarming for everyone because they won't be getting audit opinions necessarily. We are currently doing that work. Your officers have liaised, and the actuaries provided information as needed, and they are currently kind of crunching all the numbers that we need to get the assurance. But I really just wanted to flag that there is a risk to the audit opinion being signed by the 30th. We are waiting for confirmation from the FRC as to what they think is sufficient, but we kind of put the work in progress. So then if they say, yes, you do need the work, we don't then start the process in a week's time. We've already got it underway. And really then probably I'll hand over to Ian to see if he wants to add anything else from it. But that was really, and I'll take questions later. Thank you.
Thank you, Liz. Ian? Can't hear you.
Of course, the standard, I'm on mute. I said, thank you, Chair. Thank you, Liz. I think most of the items really that I was going to cover have been mentioned either by Roger or Liz. I guess there's just a few things we probably need to bring to the committee's attention. I certainly I'm not going to go through every page of what is quite a long report, particularly on the main council audit. But I guess just looking at the main council and page, which starts on page 225 of your papers, and as mentioned by Roger, we do have a number of items that are still ongoing. So our audit work is fully resourced up until the end of September, and we are utilising that resource that we have. The list on page 230 of the report, or on your page 230, details the items that are outstanding. Some of those have moved on since we prepared this report, but I think the two items that I would bring to your attention are the ISA 540, which Liz and Roger have just mentioned, so I won't go into more detail on that. And then around the other item around PPE valuations. So we engage with our valuers around the valuation of the council's property, plant and equipment. We are waiting on information from our real estate team. That report is being chased and we should receive it shortly, I'm assured today. Other than that, in terms of the items that are outstanding, it's just really now generally the normal course of business of finalising the audit, getting the file through review, etc. So nothing that we wouldn't necessarily expect to be on that list. But I think PPE and the pensions are the two items that I would bring out and raise so that you're aware of, really. I think just to go back a page as well, the other thing to mention is around changes to our scope from the audit plan that we previously presented to the committee in March. As I say, so on page 229 of your reports, you'll see changes in materiality. So essentially that's just updated for receipt of your draft financial statements for the current year. The numbers that were provided in the audit plan would have been based on the prior year's statements. And then there were two changes to the audit risks and areas of focus that you'll see detailed in the table at the bottom of that page. The first was around the new cash receipts system, Adelante, which we had initially classified as a significant risk. Upon our review, we identified that system didn't go live until the 29th of March. The value of transactions was immaterial, and therefore we no longer had to apply a significant risk to it. And the second was around the PFI scheme around schools, where we had initially allocated that as an area of focus with higher inherent risk. Again, our work that we then undertook at the final statement stage highlighted that there'd been no changes to the inputs, no changes to the detailed model, and therefore we could rely on the work that we'd done through 16-17 through to 19-20 on the detailed model, and could just do some transactional testing to ensure that the outputs from the models were correctly reflected in the statements, and we had no issues that arose as a result of that work. I was going to take through sort of the misstatements, but I think Roger's kindly probably mentioned all I would have done on those. Obviously, I'm happy to take any questions. I think probably the only things that I would touch on is around the significant risks and the fraud risks. So in respect of the fraud risks that we identify around misstatements due to fraud or error, I think it's probably important to bring to your attention that we found no weaknesses in control, no instances of inappropriate judgments or no unusual transactions. And with respect to inappropriate capitalisation of expenditure, again, which was another fraud risk, we didn't identify any issues that we would need to bring to your attention as a result of that. The significant risk that we have is around the PPE valuations, and obviously that work, as I mentioned, is ongoing. I think probably at that stage, they were kind of the key things that I was going to pull out. Liz, I don't know if there was anything else that you would mention. I guess the only other thing is in section, I think it's 8 of the report, that just confirms our independence and our independence of the council, and that there are no issues to report as a result of our work on that.
That's great. Thanks, Ian. If I just really quickly just give you headline messages from the pension fund, this was a really clean audit, so that's a really good sign. On page 279, if I just quickly run you through the exec summary, Again, we've just updated some of the areas and we've just talked around the accounting estimates, so I won't kind of rehash that. Changes in materiality, the value of your net asset statement increased. So we maintained our materiality level at 1% of the net asset statement. So it went from a planned materiality level of 6.9 million and it increased all the way to 9 million, which is obviously useful for our testing because it gives us an additional, when we're sampling, obviously on a much larger basis. We've done some additional procedures on page 280, the status of the audit. We've concluded the work now on unrecorded liabilities and benefits payable testing. The majority of the areas that are now outstanding for the pension fund audit are around just the completion, the review, all the final bits that we need to do kind of when on the couple of days that we issue the audit opinion. There's one thing with Prudential around the amount of additional voluntary contributions paid by members during the year, and that's again a national issue with any Prudential clients, but the council's working to resolve that with Prudential and to get that information for us. And then on our 3 areas, we had one significant risk identified, which was the misstatement due to fraud or error, and that's specifically around posting of investment journals. And you'll be pleased to hear that we've completed our testing and we found no indications of management override or any kind of rogue journals. So that's a good sign. Going concern, we've completed our work and we're satisfied with the management's cash flow and of the going concern basis for the accounts. That's appropriate as it was last year. And then the valuation of private debt and infrastructure investments. Where you have level 3 investments, we do additional procedures on those because obviously they're very difficult to audit and value. So we have to do additional procedures, get audited accounts, kind of get control statements from auditors of those funds. And we've completed all of that work. We have one amendment in that section, which is only for 1.8 million. So it's well below materiality level, and management have amended this in your final version of the accounts that you're seeing tonight. That was all I was going to bring out. Again, we've remained independent and I'm proposing an unqualified opinion as at this stage, obviously bearing in mind what Ian said about the PPE and the IS 19 work, kind of pensions work being in progress. Depends on those, we will be issuing unqualified opinions for both sets of accounts this year. And obviously we would come back to you if that situation changed at all in the next couple of weeks. Really then just take any questions.
Thank you, Liz. Are there any questions to the auditors? David.
Thank you. It may well be that Roger would need to answer part of my question, but it is a question to the auditors, and it's about the overall financial position of the council, particularly bearing in mind the impact of COVID on our finances. And what has been said during the course of 2021, or what was said during the course of 2021 about the position of the council and the precariousness of its finances because of COVID. And yet, I note that we have transferred £8.6 million to balances that money we had, I suppose, anticipated spending and perhaps income that we thought we might not get. But nevertheless, the council finds itself with 8.6 million at the end of 2021. And that doesn't seem to include the provision for COVID going forward and the various grants that are already in the system but maybe not paid out. So I'd perhaps be grateful for Roger to just take us through that bit. And then my question to the auditors, perhaps to Liz, is this. You've just said that there are no issues. Are you completely clear that the council is not about to go bust, but we've got reasonably robust finances and that we have enough grants to meet our liabilities, because we were being told that we didn't?
Chair, If I could start.
Please, Roger.
I'm sure Caroline will pick up on any points. With regards to the issues we experienced last year, of course, the result from the COVID pandemic meant in some respects some of our services weren't called on, and so to a certain extent services sort of underspent to a degree in that, but those services have been picking up with the demand. And of course, with the impact that COVID has had on the public in Merton with regards to all the factors that we know and we've seen in the media, we're likely to experience an increase in service take up. There are three other things that resulted in the reserves, the outturn position at the end of the year. One's around business rates cash flow. The way Section 31 grant income, which compensates councils for the sort of huge increase in pandemic related business rates relief, flows through to the collection fund, meant that many boroughs, including ourselves, had to put this funding on into holding reserves, effectively setting to one side to fund future payments that will be required through the retention scheme. Another factor, of course, is that we did receive a lot of funding streams, COVID funding streams, quite late in the year. So we naturally had to put those into reserves and balances to carry forward. And they have been spent presumably pretty much already, but they'll be spent throughout this year. And it was just the timing of when we received those grants that temporarily swelled our reserves at the end of last year, but it was only a timing issue before they were applied for the purposes for which they were intended. And I suppose the last point I'd make in many respects is sort of the general uncertainty. We live in very uncertain times. The impact of COVID is still with us. Some of those impacts are flowing through, and we can still see in our monitoring reports this year the impact that COVID is having on our income streams, on our business rates and council tax payments and some of the welfare payments we have to make. And so at this period of great uncertainty, it's very much, and this is very common amongst all councils, a prudent measure that this is a time when reserves do come into play and have a significant importance in making sure that the council can meet its commitments and doesn't run out of cash. So I think that would do for now.
Ryan, would you like to comment on that before I ask Liz to respond from the auditors?
Apologies. Yes, thank you, Chair, and apologies for being late. I came from the Long Service Awards. I suppose in answer to Councillor Williams' question, there was clearly so much uncertainty during the course of the year. So when we started, there was a lot of additional services, a lot of additional support to people who were shielding. And at that time, we did not have any notification of the support we would get back from MHCLG. So we worked very closely, we did monthly monitoring, and over the course of the year, you'll have seen from the monitoring reports, we actually got some grant in 4 tranches. So until we got that grant, we didn't know what level of support we were going to get. So during the summer, it was still really significant that we had major issues around the levels of funding, but we got additional grant. We got grant then support towards our sales fees and charges, but not our commercial income. And the business rates and council tax, they've done in a different way because that impacts on the collection fund. So I think, yes, I agree at the beginning, there was a lot of uncertainty, but towards the end, and we started to show those elements of the reporting through, and there was a lot of expenditure which came through at year end. So again, trying to maximise the grants to make sure that we utilised those so we didn't have to repay those. So there was some spending which we were doing that we've looked to make sure that we can maximise the use of the grants. So that has also helped with increasing the underspend. But if you look at sort of the current monitoring reports, we are still short in the cost of COVID this year. So there is an ongoing impact of COVID, and we just need to see how long that continues into future years as well. Thank you.
Liz, would you like to respond on behalf of the auditors?
Yeah, thank you, Chair. Yes, really just to say we have looked at the financial position of the council and obviously your future look as well as part of the going concern assessment, obviously with the looking at the future cash flow for a longer than 12-month period. And in reference specifically into our report is the value for money work we do. So the National Audit Office updated the way that we do the value for money work for 2021, and they issued that kind of guidance to everyone under the NAO 2020 code. As part of that, we did a very detailed risk assessment, and in the report today, we said that we didn't identify any significant risks. The 3 areas that we look at are around governance, improving economy efficiency and effectiveness, and then financial sustainability. So it kind of covers all the area that officers have just responded on, and obviously related to your question. There were no concerns raised during our work, or actually since looking at the accounts as well. So I'm satisfied that I can issue the audit opinion and the draft that's in this report to you. That says that there are no issues arising from your value for money procedures, and that there is no impact on my audit opinion. So I'm satisfied that the financial sustainability of the council for the short to medium term, is satisfactory.
Thank you. I must say, from my perspective, I've been the chief executive of a national voluntary organisation for the last 27 years, and I have never experienced anything like the uncertainty that we have this year. My organisation has a lot less zeros on the end of its income and expenditure, but the same principles apply. And during the summer, we were forecasting a huge deficit, which we took action promptly to correct, and ended up on the right side, and ensured the future of the charity. And I think from that perspective, I would rather that we have a transfer into balances than have a transfer out of balances. And so I would like to thank the finance staff and all the other staff for their efforts during the course of the year to keep the show on the road, to protect the citizens of Merton, to do the very best they possibly could, and also for these, what I consider to be excellent results in the circumstances. Are there any other questions? Adam.
Thank you, Chair. John. I'll try and be quick. This is a question to the auditors. So Roger and yourself sort of spoke about the ISA 540 around the work on accounting estimates. So I've got 2 questions. One is, what extra work has come about the accounting estimates for the DB pension scheme side this year that was different to previous years? And the second question is around the significant risk that was on the valuation of land and buildings, where I believe that we're still waiting for the inputs for yourselves to finalize the work. How has ISA 540 impacted on the work around this, given that it's an estimate on land and buildings? Thank you.
Liz?
Thank you. Through you, Chair. If I answer the first one, because I started to elaborate on it earlier, and then I might pass the second one to Ian, if that's all right with Ian. If not, I can pick it up. So the first one is obviously around the accounting estimates for the pensions. As I said earlier, the revised element of it, we're calling it a black box for kind of so we look at all the inputs that you do by sending the data to the actuary. So we audit the council's data, and then we say, how have you transferred it to the actuary, and is that then accurate? We have assurance over that, and then obviously we get the IS 19 point that comes out of the black box, which we're calling what the work of the actuary, the calculations that they do that we don't have visibility of currently. They then send us the report at the end, and we then agree that to the figures that are disclosed in your financial statements. What has been challenged back from other audit firms, and EY are in agreement with, until obviously the FRC have said different to us, that we know the data that's been sent to them and we know the figures coming out of it, but we don't know that the data that you've sent to them is the data that they've put into their calculations, and therefore they could have typed 10,000 to be 1 million, and therefore your IS 19 calculations that have come out and that are then disclosed in your financial statements could be out. one of the arguments we've been posing back to obviously the FRC and the NAO and all the audit firms are doing is that one of the tests we obviously do is an analytical review on your accounts. And obviously when we look at the pensions figures, we say, and obviously when they do move, and pensions are one of those things that do move wildly every year, we then investigate that difference. We speak to management about it and get ourselves comfortable that actually management understand the movement, and if not, they go back to the actuary and then the actuary gives it. So that's how we've had the assurance before, but quite rightly, we've been challenged. Actually, we don't know what calculations are ongoing. Actuarial firms, quite rightly, don't want to provide that information to auditors. There's a reason you have an expert to produce figures in the accounts. I'm not an actuary. I wouldn't pretend to try and even understand the work that they're doing. So we need our pensions experts and our actuaries within EY to get me that assurance, so they know what the actuary's done. And that's the element that's new this year, and on top of the work that we've done previously. We've only ever done the checking the bit that's gone into the box and checking the bit that comes out of the box. If that answers that element of your question.
About the second question.
Right.
Remember to unmute this time. So I think there's a couple of things that I'd probably draw out. So the main things for me are around doing an enhanced risk assessment. So that's identifying which properties and which areas that we think are more susceptible to valuation risk and fluctuations up and down. Now, clearly, with the COVID pandemic in the last year, that's been quite difficult to do and has been sort of certainly a moving feast, but something that we factored in. One of the other things is around how we test them and how we approach that testing, and how we look at what management have done and how we document that. And probably the third thing is around increased professional skepticism for me, in terms of challenge of what management have assessed and what the valuers and the district valuers, which are the council's valuers, how they have assessed the valuation of each of the property. So there has certainly been a lot more discussion, and I'm sure probably Roger would agree, a lot more discussion between us and the council's valuer and valuers, internal and external, this year around what basis things have been valued on, how we can justify that, etc. So just the general level of challenge that we need to provide this year has increased, and alongside that is increased levels of documentation from our side around how we discuss those with management, and then at what level that is reviewed in terms of, Liz as the associate partner, and then any further review that we may have on the file. It's certainly, the valuation of PPE is also certainly an area of focus that we've had this year from any quality reviews, any external quality reviews that we've had as a firm. I don't know if there's anything you'd want to add to that, Liz.
No, that's great. Thank you, Ian. Really comprehensive.
Thank you. Caroline.
Thank you, Chair. Most of my questions have been answered now anyway, but can I just ask about the materiality level that has been increased? And I was just wondering what information, why that was increased, because I'm just thinking in terms of the pandemic that we've had. There was some news on, the media reported that when grants were being given to businesses, people were setting themselves up as businesses just to apply for those grants, and some of them were given money. So that's risk. I mean, that's a fraud that you talk about, that we were fine, but then also materiality has been increased. So I'm just wondering, can you just talk to us about that, please?
Liz.
Hello, sorry, I'm trying to get myself off mute. We effectively set a percentage of your gross revenue expenditure, and in the outline audit plan, it was set on the audited 1920 account, sorry. And then when we get your draft financial statements for 2021, we update that figure to ensure that then it is the latest figure that we're doing. So therefore, the reason for the increase is the reason that your expenditure increased in the year.
John.
Quickly go back to the reserves. Anyone looking at this set of accounts would need someone to explain to them why the reserves have gone up over 60 million in 1 year. Couldn't these figures be separated and put under the headings which they are due to be spent. When you look at the reserves figure for this year, oh, great, we are doing well, but in fact, we are not, because this figure don't really belong to the reserves as such.
So if I could help, Chair, I can see the page I think that Councillor Dehaney is looking at is page 14. If I take you to page 74, then that breaks down our usable reserves. And then on page 78, at the top table there, you have the breakdown of our unusable reserves. So you will see, hopefully that helps then. And if you have any further questions outside, if you want to come back to us, we'll help.
You need to be very careful, John, because the director's looking over your shoulder and keeping a close eye on you. But I think it could also be said she's just simply doing her job and responding efficiently to members' questions. Are there any more questions? Okay. Well, if we go back to page 1, there are a series of recommendations there. Are those recommendations agreed, subject to the outstanding work that has been described to us this evening? Is that agreed? Thank you. So Liz, does that mean you can get back to enjoying yourself at Center Parks? And I assume you're there with family, and I hope you have a really lovely break. Thank you for interrupting your holiday to answer questions from members of this committee this evening. We really do appreciate that.
No, thank you, Chair. Thank you for allowing me to leave early. I really appreciate it. Thank you.
Because we've been so nice to you, we're expecting a substantial discount on your fees.
I did think I'd got away lightly, but is that
and
for
you'll
next
be in
committee?
a good mood at the moment because you're on holiday anyway. So is that agreed? I think the committee's agreed it anyway, if not the auditors. Have a good evening and a good holiday.
Thank you, Chair. Thank you.
Okay. Can't blame a man for trying, can you? So item 5 is the update on RIPA authorizations. Is Louise on the board? I've got.
Thank you.
There you
hello.
are.
Hello, hi. I feel like a pantomime character. She's behind you. Shall I start?
Yes, please.
Yeah,
Louise,
I'll
yes.
just keep it very brief. It's a very short and sweet report tonight. Just giving you the regular update on the amount of authorisations made under the Regulation of Investigatory Powers Act. The answer is there have been none in the last period. There has been one request for what's known as a non-RIPA authorisation, where the Act doesn't specifically speaking apply, but it's good practice to record your reasons for doing something, and that related to test purchase for alcohol sales for young people. But otherwise, it's been a fairly quiet period.
Thank you, Louise. Are there any questions to Louise?
I've just got one question.
Yes, Martin, there's no activity to report on. You've got a question. How do you manage that?
I don't know.
Okay.
You tell me. How does this compare to previous years in terms of RIPA requests for investigation?
It's pretty much standard since certainly the last 2 years. There's only been one request which we reported in a previous meeting where actually we didn't get the paperwork right at the magistrate's court, and then we had to go away and start again. But by the time we did that, there was no need for the activity to continue anyway. But no, there's been very little activity. We do work closely with our colleagues in the fraud partnership to make sure that there's not activity that ought to be being authorised, but which isn't. But we're fairly confident that we've rolled out training now to a number of relevant council departments, and that people do understand when they should make a request for authorisation and what kind of activity is covered by it.
That has a question too.
Thank you, Chair. And apologies if this has already been answered in previous meetings, but could you remind us about the what level of requirements are needed to have a successful request, and who officially makes those requests?
So there's a pro forma which we've attached to the revised policy, which sets out the criteria for going for a REPA request, and their legislative criteria that relate to the nature of the activity that one wants to survey. So it has to be serious criminal activity punishable by certain degrees of fine in the magistrate's court to count as activity which it is lawful to covertly survey, as it were. So that's all set out in the policy. There are the head of the Regulatory Services Partnership is an authorised officer, and he has the power to agree that an application can be made, but the application has to be made to the court. So it's not something that officers within the council can authorise. We just authorise the fact of the application being made to court, and then it's a matter for the magistrates to determine whether we've made out the case. And then there's a quality assurance process, which means that any applications also need to come via me, albeit that I'm not the authorising officer, so that I can double check as well that we're only making applications in appropriate circumstances. Was there another half to your question?
Thank you, Louise. So we now move on to recruitment of an independent person, and that is also Louise.
Yes, thank you, Chair. So legislation governing the recruitment of independent persons who help me in my role as monitoring officer in relation to member complaints, and also would advise hearing subcommittee should it come to that, is governed by statute, and we're required to advertise for independent people. What this report does is flag up the fact that one of our independent people, Clive Douglas's period of office expires in February. So we're seeking authority to go out to advert for an independent person. I should say though, Chair, I'm yet to have a conversation with Clive about whether he's willing and able to continue. From a legal point of view, that's permissible. You can renew a term of office once before having to go out to advert again. So with your leave, I would suggest that I have that conversation before your next meeting, and if at that time he indicates a willingness to continue, then we don't perhaps pursue the advert route and as suggested, and the recommendation to full council. They are quite few and far between independent people, and it's always been very difficult to recruit them in the past. So it would seem sensible if we have someone who's now got the experience under his belt and willing to continue, that we accept that offer gratefully, but I can report back at the next meeting.
I see lots of heads nodding amongst the committee. Is that agreed? Thank you, that's agreed. Item 7 is complaints against members, and that too is Louise. We're working her hard tonight. Her productivity is going up.
Thank you. There have been no formal complaints moved through to investigation stage since we last met. My colleague Fabiola Hickson's dealing with a complaint in its very preliminary stages at the moment, and should that go any further, then we'll report it back to the next meeting. I don't think it's appropriate to say anything more about that one at the moment, though.
Okay, thank you very much. We note your report. Item 8 is the work programme, which is set out on pages 9 to 10 of the initial agenda. Can we note the work programme? Martin, you've got another question. Cabinet members asking questions. And
I just have a question. Is the polling district review coming to the November General Purposes and Standards Committee? Because obviously it's closed now. You believe so? Yeah, just wanted to note that.
Yes, I can confirm it is.
thank you. Any other questions on the work programme? Can we note that? Thank you. I'm now required to resolve that the public are excluded from the meeting during consideration of the report that we're about to consider, on the grounds that it is exempt from disclosure for the reasons stated in the report.